Welcome, everyone. I'm Kara Griffith, the President and CEO of Tax Analyst. I'm so pleased that you've joined us today for a timely discussion on the future of tax policy. As you know, the upcoming elections for both President and Congress will greatly affect the direction of tax policy in the United States. We're thrilled once again to have a large audience tuning in, not only from all over the country, but also from around the world. And that's particularly appropriate because, needless to say, the impact of our election will extend far beyond our borders. I really look forward to our discussion today and to your questions. Today is the fifth in Tax Analyst's new series of public discussions that we call Taxing Issues. We launched this series as part of our 50th anniversary celebrations, and through it, we're bringing the tax community together for bipartisan discussions about the future of tax policy with leading policymakers and experts. As I've mentioned at previous events, this series will address not just federal tax issues, but state and international tax issues as well. We anticipate that our next webinar will focus on the international side of things, so stay tuned for more details on that. With COVID-19 continuing to threaten the health of Americans from coast to coast, we will continue to hold these discussions in a virtual format for the foreseeable future. But we welcome your feedback on how we can make these discussions more interactive. You can send any feedback to events@taxanalyst.org. And now onto the topic at hand. As I noted, the election, which is already underway in many states across the country, will prove important for the future of tax policy. The economy continues to struggle, and the next presidential term may very well begin with an additional round of economic stimulus measures. Meanwhile, large parts of the 2017 Tax Cuts and Jobs Act, the TCJA, are approaching their expiration date, and policymakers will have to decide whether to extend them or let them expire. President Trump is touting the success of the TCJA in fueling the strong economy that America was enjoying before COVID-19. The administration has talked about a Tax Cuts 2.0 package to usher in another period of economic growth and to help bring the economy out of its COVID-driven downturn. The president would likely interpret a re-election victory as a ringing endorsement of the TCJA, and his win could serve as an impetus for making some of the law's temporary corporate provisions and all of its individual provisions permanent. The president and Congress might also decide to repeal some of the tax increases that are scheduled to take effect in the coming year, such as rate increases for beet and GILTI. But the Democratic nominee, former Vice President Joe Biden, has a much different and detailed tax platform that he says will better position the economy for the long term. His plan is arguably the most progressive of any Democratic nominee in recent times, and he would obviously view his victory as a mandate for change. Biden has proposed raising the corporate tax rate to 28%, imposing a minimum corporate tax on book profits, and phasing out the Section 199 Cap A pass-through deduction for qualified business income. He would impose additional restrictions on offshoring, such as restructuring GILTI as a global minimum tax on all earnings on a country-by-country basis. He also suggests that he would implement strong anti-inversion rules and take a hard line against moving jobs overseas. In addition, Biden has proposed to raise income, capital gains, and payroll taxes on individuals making over $400,000 a year. Notably, he would raise the top income tax rate to 39.6%, reversing the TCJA. But would either candidate get his way if he were elected? That depends on Congress. Democrats are projected to retain control of the House, and they have a shot at retaking the Senate. But neither party will control 60 seats in the Senate. So unless the party in power plans to eliminate the filibuster, negotiations over tax legislation will be necessary no matter who occupies the White House. So to help us sort all of this out, we have two outstanding speakers, and I will introduce them in the order in which they will speak. I've asked each of them to speak for 5 to 7 minutes, and when they have finished, I'll begin our moderated discussion with a question or two. As I noted at the outset, we welcome your questions. Thank you to those who've already emailed questions in advance. During today's event, please use the chat feature to submit questions, and I will get to as many of them as time permits. We'll hear first from John Talisman, founder and managing partner of Capital Tax Partners. John served as Assistant Treasury Secretary for Tax Policy in the Clinton administration, and he has strong ties on the Hill, having served as Chief Democratic Tax Counsel for the Senate Finance Committee and Legislative Counsel for the Joint Committee on Taxation. We'll hear next from Mark Prater, Managing Director in the Tax Policy Services Group with PwC. Before joining PwC, Mark served as Chief Tax Counsel and later a Deputy Staff Director for the Republican staff of the Senate Finance Committee. I look forward to our discussion today. And with that, John, I turn it over to you.
Okay, thanks, Kara, and thanks to Tax Notes and Larry Haas for inviting me to speak today to the Tax Notes audience. I'm really pleased to be here, and I hope everyone out in the audience is staying safe and sane during this difficult time. I'm honored to be on the panel today with my good friend, Mark Prater. Mark and I have known each other for roughly 30 years when we both served on the tax writing committees together. And we are living proof that both parties can work together in harmony and relative collegiality. Mark has, to those of you who know him, Mark has an encyclopedic recall of events, issues, and deliberations. It's always disconcerting when Mark recalls a conversation he and I had a couple decades ago, and I have no recollection of it at all. This trait has served Mark well, and will be interesting for the audience to hear, as past is often prologue in what we're talking about, and can educate what's going to happen. So when people ask me what is going to happen, and we're going to talk through a bunch of scenarios later, I say, and this is mostly focused on if Vice President Biden were to win the election, is there are 5 questions that need to be answered before I can answer your question as to what's going to happen. So the first is, what is the state of the economy in January? And we'll go through that a little bit. What remains left undone is the second question. So if they still haven't done a COVID relief package, which the Speaker and Secretary Mnuchin are having ongoing conversations, but certainly it looks less than likely that they're going to get a deal, albeit the conversations are still ongoing. That will be something that's either left over for a lame duck or for the next president to resolve once he takes office. Obviously, you also have the critical issue for a lot of businesses about extenders, and then the technical corrections from the Tax Cuts and Jobs Act. So those 2 extenders and technicals will probably have to wait until there's a COVID relief package, because they're not going to move something on that's business focused before they do something that's COVID relief focused. The third question is, what is the makeup of the Senate, and when will we know that? The narrow margins, as Kara alluded to, make tax legislation, particularly tax increases, very difficult. And as Mark will tell you and knows firsthand, the Tax Cuts and Jobs Act, even though they were spending $1.5 trillion, which at the time was a lot of money, seems like not a lot of money after CARES, but it was a lot of money at the time, was really difficult and only succeeded after healthcare failed. It was essentially an existential threat to the Republican Party, and it was something they had to get done. And that's why Mark lost a couple of years of his life in 2 months. The fourth issue is, what other pressing priorities will take center stage? Healthcare, immigration are issues that are also critical campaign issues for Joe Biden, and certainly could be front and center, especially if there's a feeling that the ACA needs to be buttressed because of the Supreme Court situation. So that's another thing that will take part of the honeymoon period potentially, and could cause other things to be moved to the back burner. And finally, who are the key personnel in the positions that matter? So the Treasury Secretary, the NEC Director, the OMB Chief, the Chief of Staff of the White House, and then finally my old position, and certainly of lesser importance, but still important, the Assistant Secretary for Tax Policy. all of those people will have views as to what should get done and how they should get done. And that has a big effect on the campaign, on campaign promises, et cetera, and what gets done. So I'm going to real quickly just talk about a couple of additional items that just to keep in mind as we move forward, because they'll help inform what Mark and I are talking about. The first is the 2022 election cycle. The Republicans are defending 22 seats of 34 in 2022. The D seats are generally considered safe. It seems like there's probably about 3 competitive races, at least as people are looking at it now. The Republicans have 6 competitive races, and you also have a couple key senators retiring from the Finance Committee. Burr and Toomey are retiring. So all of that will matter as we move forward. Another major point is campaign proposals are important, but they often get either modified or sublimated by other events. We like to call those events in our office unforeseen occurrences, or UFOs. And what you see is that take Obama. President Obama had a lot of proposals during the campaign. And then obviously we had the financial crisis, and a lot of his things got put on the back burner because of he had to do the Recovery Act. Now, he was able to get some of his campaign promises finished during the Recovery Act. The Make Work Pay credit was done, at least on a temporary basis. But things like raising taxes on wealthy people was deferred until the fiscal cliff negotiations in 2012. So you're really talking a 4-year period before that campaign proposal came up. And then the last thing I'll raise, just because it's interesting and probably not something that most of you outside the Beltway have focused on, is the debt limit expires in middle of this year, upcoming year. And the debt limit is obviously a critical and difficult task in any situation. But certainly it will be one that's probably even more critical with the deficits that we're running as a result of COVID, to see how people react to it. So the question that Mark and I will at least attempt to answer is, when will deficits matter again? Because we're certainly going to be in a situation where they will matter at some point in the future. So I'll throw it over to Mark at this point.
Thank you, Kara and John. Pleasure to be here this afternoon. I want to thank Tax Notes for inviting me to join John today. John's kind words are very much appreciated. I think he's spot on one thing that is always a factor in making the machinery of policy and government move. That's relationships, trust, confidence in conversations that are critical. Capitol Hill is like a small town, and there are folks that play different roles. But John and I had and have had for a long time, as he said, almost 30 years, solid relationship. We could treat conversations in whatever form we needed to. They could be formal, informal, off the record, on the record, whatever. And one of my favorite events in the period when he was assistant secretary or acting assistant secretary was our Sunday morning breakfast, where we'd catch up on everything from sports to the matters that were coming up, treasury matters, legislative matters. And we really tried to be helpful to each other. And I think we were. And that is, I think when you look back at that period, tax policy worked pretty well. The system worked pretty well. Wasn't perfect, but a lot of that was the quality of the relationships of the key folks involved, and obviously the members. His boss was Secretary Rubin and Secretary Summers. My boss was at that time Chairman Roth, and the other members that, to the degree the committee was acting on something. So let's kind of go through. I think John outlined the key questions very well. the first part is the state of the economy. That is really a key variable, because if the first quarter is still a situation where you have prospects for tepid growth, it will focus the minds of the key players, no matter the outcome. If you have a status quo election outcome, and I identify that as a situation where you still have divided government, and it could be one of two forms. You could either have a Republican Senate, and that's one of the questions John raised, whether what's the Senate situation, or you could have possibly President Trump being reelected, so that's one set of scenarios, 1A and B, and then the second set is Democratic sweep. And John and I have been through all of those before. We've played different roles on that. Sometimes we've been on one side that's been the sweeping side, and the other side, the swept side. It all affects kind of the posture. But the one thing we do know is that no matter what the election results are, there will be a factor there of the state of the economy. It seems that we have an economic recovery that's occurring, that is occurring faster than probably conventionally would occur for this kind of deep recession, but it's not an even recovery. It's not an even recovery across demographics or sectors. And there seem to be pockets of the economy, say mid-sized businesses, sectors that you'd expect to be hit, travel, tourism, all of those that have been hit really hard. And so policymakers will have to focus on those things. They'll have to focus on all of the policy tools they have, and tax is one set of those policies. So I think that's I agree with John. That is really the first question, the primary question, and will to a great degree shape what happens in terms of the order of the events. When you look at the other questions, when we're looking at the question of what's the composition of the Senate or what's left over, those are also relevant too. The Senate, as a creature of the Senate, I perhaps have a certain bias. John has the objective background of having served on the Joint Committee too, so he served there, and in the Treasury Department. I'm solely a creature of the Senate, so it's natural for me to think of the Senate as a critical place, but it really is because of the rules and the processes, and John and I'll get into that here shortly. But one of the things, if you have a Senate and you have undone business, John mentioned the undone business. One thing we do not know is what the disposition of the elections will be at this point. And we may not know in the Senate until as late as January 5th. And the reason for that is under Georgia law, there is a jungle primary that's underway. Senator Loeffler is the incumbent there. There's a jungle primary which will likely produce a runoff that will not be decided until January 5th. And the other Georgia seat, the incumbent is Senator Perdue. And if Senator Perdue doesn't achieve, or his opponent does not achieve a majority, then that goes to runoff under Georgia law. So we may not know when lame duck arrives who controls the Senate. That's just something we'll have to see. But what will influence kind of the playing field will be kind of what the outcome is in terms of the leadership, tax writing committees, et cetera, and this unfinished business. And there is a lot of it. John briefly touched on it. Again, going to this first question of the state of the economy and how do policymakers respond. There's been the House has put out a very comprehensive proposal. The Senate has responded. Senate Republicans have responded with a less deficit impacting proposal, but also comprehensive. there's a possibility that those could get worked out, but that's going to depend on, to a certain degree, the elections and the state of the economy at that point. The fourth one, when we're talking about these features of how we look at personnel and other questions, those are going to be more questions for the start of the new Congress. So, and John and I again experienced these things. He has more objectivity because he experienced them from the Treasury Department side and the committee side. But personnel are really important. And John mentioned the secretary. The secretary is the leader of the Treasury Department. Largely puts a team together of sub-cabinet officials, like the position John served, and others. And the secretary also usually is the primary spokesperson for the administration when we face our trading partners. So in things like the G7s and the G20s, where a lot of tax issues are in play, the Treasury Secretary is a very important person in those discussions. The Secretary also is important on the policy direction the Treasury Department goes in terms of regulations. So currently, regulations in process and regulations that would come into play, the Secretary will be important. And the Secretary will set the tone for those priorities in terms of the people that the Secretary picks for those sub-cabinet positions. They also have to go through the confirmation process, which in the Treasury Department, most of those nominees come through our old committee, the Finance Committee. And the Finance Committee has a very vigorous vetting process, probably the most vigorous of the committees in the Senate in terms of looking at financial data, background, et cetera. It's very thorough. So standing up a government is an important feature here. It's not like January 20th at noon. If former Vice President Biden becomes President Biden, then he doesn't stand up a government right away. He has to get the people through, and so that takes some time. John also commented on the process, legislative process, some, and that we'll get into that some, but let me just kind of introduce some topics on that. So the Senate rules, again, the Senate is kind of an important place here because the House is largely a majority function body. When a majority in the House decides they're going to move legislation, they have a rules committee that sets in place the terms and conditions of debate and processing. The Senate's not that way. In the Senate, you have a regular order process, which contemplates a lot of rights for members to amend and debate. You have reconciliation, which is an exception to that process, and we'll talk a little bit more about that. But reconciliation is kind of has its pros and cons for legislators. I think people from the outside that aren't Senate geeks tend to think of it like, okay, this is the way the majority gets something done. And that's true in the sense that it necessitates a majority vote, but it comes with lots of costs. And I'll just briefly outline those costs. One is it's limited by the Byrd Rule, which is a Budget Act rule that basically protects the rights of a minority. And it may not even be a partisan minority. It could be a regional minority or a single senator could protect that senator. So the Byrd Rule is something that has an effect on legislation. And there are a number of features of it. The second thing to think about in reconciliation is because it is numbers driven, it's driven by a number, the policy, and this has been my experience under both Democrats and Republicans, tends to get backed into that net number. And so you see that with TCJA, you see that to a certain degree with the ACA, you saw that with EGTRA back in 2001, you saw it with Oberyn 1993. They all have those features. So it does affect some of the fiscal path and the substance of the legislation. The process is also really important because it's not always partisan. I think you can look back at a bill John and I were very involved in back in 1997. You had a re-elected President Clinton who made gestures to the Republican majority and the leadership, and they crafted a deal, and really a bipartisan deal that was processed through reconciliation in 1997. So it doesn't necessarily have to be partisan, but it usually is. And that means a majority ends up owning the whole product, all of it.
Yep. And Mark, if I can just real quickly, there's two aspects of reconciliation that will be important with respect to a Biden agenda. One is under the Byrd rule, you can't have increase the deficit beyond the budget window, which is
right.
a critical issue. And then secondly, and we'll get into this probably a little bit more, but with the Social Security payroll tax issue, you cannot impact changes that affect the Social Security Trust Fund. And so you wouldn't be able to do that proposal through reconciliation, most likely, which means that he would have to put that off into a bill that, again, is most likely to attract 60 votes, or again, as Kara referenced, the elimination of the filibuster. Those would be the two choices there. So.
That's right, John. And the remedies under those two different points of order are different. Most Byrd rule violations mean if the proponent of the point of order prevails, the provision drops. In the case of the Social Security Act point of order, we always called it the bomb, because if the proponent prevails and there's not 60 to waive, the bill loses its reconciliation protections. So it destroys basically the unique status of the bill. So, and then John also commented on the election cycle. I agree with his comments. Again, the playing field is tilted somewhat to Democrats there, as more Republicans are defending seats in very competitive districts. There are some, as John said, some competitive Democratic states, but it's a playing field that tilts to Senate Democrats, so that could influence things. And then unexpected, or he talked about UFOs. Those are always a factor. And then the debt limit is a factor as well. Again, it's harder even to suspend the debt limit, which is kind of the default process that we've fallen into on a partisan basis. I want to say one more thing, and then and that's that I think if you have a Democratic sweep, former vice president is a creature of the Senate, even more than I am. He served 44 years in the Senate when you combine his Senate service and his vice presidency. And so that may provide some opportunities. And I will just say again on reconciliation, it's a hard thing because you own it if it's partisan and you have to deal with a lot of the consequences of it. I could see, if the opportunity arose, perhaps if former vice president becomes President Biden, he could reach out, and if he finds a regular order supermajority stimulus bill, say up front, taking care of COVID and some healthcare related issues, that would be, he doesn't have to deal with all these limitations with reconciliation. And then he could hold a reconciliation instruction for things that may be more pure Democratic issues, where the caucus wants more unity, and you might not find Republican support. So what John talked about, the order of issues is really important. What becomes a priority and how taxes fit into that. And also kind of the grouping of the issues. I really do see an opportunity here for stimulus and infrastructure, some healthcare related things. Those are going to be probably bipartisan issues. And you see the Congress with CARES did a record amount of deficit spending, but both sides were involved. So the political consequences allowed that unique and I think largely needed action to occur. So anyway, my only point is the vice president is a former vice president, a creature of the Senate, and knows the place, knows the people, knows a lot of the people. So that is there. It's President Trump, as John said, or as you said, Kara, will probably be articulating a continuation of the tax policy that he's put in place, but we'll also have to deal with these other issues that we've talked about, COVID responses and similar matters.
Yeah, it seems like the state of the economy is critically important, and that is going to drive at least the initial period of either presidency. So if I can get the two of you kind of talking about that and looking at, so what might we see in a stimulus bill? How likely is it that we would get something? It seems unlikely that we're going to get anything in lame duck, but what might we get in a stimulus bill under either a Trump or a Biden presidency? And then the second question to that is, how are we going to pay for it? This is a lot of money to be spent time after time after time. And so while I do think there is bipartisan support of a stimulus bill in particular, likely of infrastructure as well, how are we going to start paying for these things? And Mark, for you, you could address at some point if we're going to look at if we have a President Trump and we're going to roll back some of the expiring provisions in the TCJA, we're going to keep some. How are we going to start paying for that? There's no real pay fors that seem to be included in that.
Yeah, I think, Kara, it's an entirely appropriate question. I think the answer to that is there'll have to be considerations of that in the context of all the other priorities. The budget will have to work. We know we, at a minimum, will have divided government, is likely if President Trump is reelected. So House Democrats will have a say. I mean, you can't make a law without them. And the House Democrats have a significant fiscal hawk portion of their caucus, just as Republicans have a significant fiscal hawk portion in their conference. So I think there's enough interest there. I will just tell you that politicians are rational actors, and they respond to signals from their marketplace, which is the economic marketplace and the political marketplace. I remember in my service on the Joint Select Committee on Deficit Reduction, my deputy and I addressed a bipartisan chiefs of staff dinner. It was a regular recurring event. And I had one chief of a well-known senator. I won't say who it was or who the senator was, but the person raised the question on the entitlement side. Well, wait a minute. You guys are saying we should look at some changes here on Medicare, on age or whatever. And we're looking at these things, and my boss wants to expand these things. So, and this person accurately made the point that, and this was a few weeks after we had the debt limit showdown, which thankfully was mitigated by Leader McConnell and then Vice President Biden in an agreement. And so this person's point was interest rates have actually dropped since that point. And so the marketplace isn't telling me, my boss, that, we need to go to austerity. So I think they all know it. I think they can see the numbers. They know there's a reckoning, but to a certain extent, they are rational political actors in the sense that they respond to the mix of signals that's presently before them. I do think back to the days when John and I were working together. He was in the Treasury Department, I was in the Senate, and the Senate and the House took some pretty bold actions on deficit reduction measures. But you had a group of members, bipartisan group, who were very invested in the issue. Bob Kerrey was one from Nebraska, Judd Gregg from New Hampshire, a bunch of them, Kent Conrad, a lot of senators who made that their number one priority. That was their North Star, was the deficit. In this political environment, there are still folks with that view. There are not as many of them. So I think you got to look at them responding to those. As I said, they're rational political actors. They will respond to signals.
Kara, it may make sense to put up the slide now, if that's okay for everybody to see. So, and I agree with Mark. I think Karen, thanks for the question. Really, as the Federal Reserve said, the path of the economy is going to depend on the path of the virus, right? And if we're not coming out of the virus in the spring, you're going to see a lot of action, legislative action. And it goes to what I was talking about earlier too, which is if we haven't done a COVID relief package, that's going to be the first priority. And then the question is, what can you combine with it? And can you get 60 votes for a COVID relief package with infrastructure? Because that'll help stimulate the economy as well, with or without pay-fors. And if you include pay-fors, obviously, if the pay-fors are highly partisan and consistent with your campaign, you obviously diminish your chance of getting 60 votes, which means then you've got to do it through the reconciliation route, which makes it more difficult to do COVID relief quickly, which is going to be their first order of priority, because you need a budget resolution or you need to waive the filibuster. We are in a situation right now where we lost 22 million jobs at the start of the year. We've covered about half of those, which is good. But that job loss is still greater than what we lost in the 2008 recession. And the deficits, as you show on that chart, are running at 16% of GDP, which is unheard of. You see what the deficits were on that chart previously. So we're going to have to figure out a way ultimately to pay for things. Yep. I don't expect that to be early in either administration, because I think they're going to be more concerned about stimulating the economy than they are about paying for things. But we've been sort of joking that whichever side loses the election will all of a sudden be concerned about deficits in the context of debt limit when that comes up. And we'll hold the other's feet to the fire a little bit with respect to deficits and debt limit. But I think that's a second order. If we're still in crisis, which it appears like we're likely to be, I think it's very highly unlikely that we're going to be paying for much in the context of that bill. Now, that being said, because I know I'll get asked the question, you can, if you decide your number, Mark talked about net numbers. If you decide your net number is $2 trillion that you need to spend to stimulate the economy, you can raise 500 billion and then spend 2.5 trillion, and you end up with 2 trillion net. So there may be offsets buried in this bill. Again, that goes to the issue of whether they're trying to do this through a partisan or bipartisan approach, though. So I'll stop there, I guess.
Yeah, I think that's right. I have a kind of a joke about reconciliation that the supply of offsets to reach that net number that John just referenced is always much smaller than the size of demand in terms of spending and tax relief. So that's another difficulty of reconciliation, frankly, is that the folks moving the bill have to manage those 2 points. And ultimately, the political marketplace in the Senate and the House determines where that line is in terms of the gross versus the net. But that throws on the board a lot of other factors. I do think that members are conscious of the deficit past, and especially when you look at what we call the primary deficit versus the other deficit. The primary deficit is basically policy effects and impacts notwithstanding interest, debt service. And when you look at the outlying years, the debt service factor really becomes pretty incredible, even at conservative, small c conservative interest rate assumptions. So I think the more focus that comes upon that, the better, because I think folks will realize there's a huge trade-off on further less attention to deficits. You do pay in terms of the dwarfing of the primary deficit by the total deficit.
And our low interest rates have helped mask the size of our deficits, but the question is, how long will that continue if we continue to run those deficits? And as Mark said, that will be the market-driven factor that drives the members at some point. So.
Yeah, I think that's undoubtedly right, and probably it is later than sooner that we will be arguing those. But just let's take COVID and stimulus and put it aside for just a second. I think we could probably talk for hours on what should be in a stimulus bill, what might be in a stimulus bill, how are we going to pay for it. But I did want to get to a few questions on some of the fundamental tax plans that we have right now. We have Vice President Biden has put forth a lot of concepts that are worthy of consideration. And so I just wanted to get to a few of those. When you look at his proposal, it's a pretty significant tax increase. And now taking COVID aside to a certain extent, because there's a level of saying that we're recovering right now. And so we are going to need stimulus. We need things that help the economy. Is now the right time to be considering a large tax increase? And John, I'll throw that to you.
I get all the softball.
Yeah, that's what I thought. Love a nice one your way.
How about it, John?
Yeah. I think I think your question is a good one, but as I pointed out, I think it's a question of whether you can do on a net basis more than you can do on a gross basis more than you would do on a net basis. And so there may be offsets included in a package where he is spending a significant amount of money, either through spending or tax cuts, in order to help stimulate the economy. So if the net number again is $2.5 trillion and you raise $500 billion, you can basically then spend $3 trillion to get there. So I also think there are things you can do to ameliorate, and this goes to the question of effective dates. If you're worried about stimulating the economy, you may defer effective dates for provisions until you think you're going to be passed. But because you've got a limited honeymoon period, you may still put them into law. Obviously, you can also do things like phase-ins or phase-outs that help ameliorate some of that effect. And then the other question, I think, is just whether, from a Democratic standpoint, and certainly the history of some of these key players that will be advising a Biden administration, fiscal discipline has been good for the economy over the course of time. So there are going to be people who actually believe that that's an important feature of anything that they do. And so they're going to be focused on the fiscal discipline, not necessarily slowing down the economy in the long run. There are people, obviously, who are going to be advising Biden from the Clinton era, and also people from the Obama era who feel like they helped get deficits under control as well. And so that's going to be a feature. When that kicks in, I don't know, but it certainly will be a feature of their belief. The last point, I think, Kara, just to fit it in here, is the Democrats, like the Republicans after 2008, the Democrats did not play on Tax Cuts and Jobs Act. And from their standpoint, they were in the game on tax reform. they were supportive of tax reform, but on a deficit neutral basis. And so that 1.5 trillion that was spent on tax reform is something that I think will be, from their standpoint, something that they'll want to revisit. There was another feature of that that's important as well, which Mark and I talked about earlier, which is the Democrats wanted, as part of being involved in international tax reform, they wanted the money for infrastructure. And the deemed repatriation money was part of an infrastructure package that they wanted. So I think that was something that they didn't get. And so obviously revisiting some of those decisions in the context of an infrastructure package is something that they may view as fitting into the mix. So I'll stop there.
And before I was going to switch to a question on TCJA for Mark first, but let's talk about infrastructure for a second. And I open this to both of you. It seems like there is bipartisan support for some kind of infrastructure spend, and yet we haven't really accomplished much in recent years. So do either of you have any level of confidence that we could get an infrastructure bill passed, and what might it include?
Yeah, I think I start off, Kara, with whoever is president will likely be forward-leaning on that, whether it's Trump or former Vice President Biden. They have both made infrastructure a big issue. In my experience, having worked on many highway bills and aviation bills and others, once you kind of get the momentum of the authorizers on a path to a multi-year authorization, and you had that in the Senate with a bill that came out of the Environment and Public Works Committee, not this last year, the year before, without dissent, that basically ramped up the baseline in the Highway Trust Fund and transit spending by the tune of, I want to say 70, I have it in my head, 70 billion. I didn't review that, but and if you go back to the last multi-year reauthorization bill that was done back in 2015, that bill ramped up the baseline on spending. So it's one of those things where you have kind of an instant bipartisan interest. Now, folks may define infrastructure a little differently, but there's going to be a lot of overlap on it. Members just kind of intuitively get that the U.S. is still in a kind of catch-up position on a lot of infrastructure. I, for one, was a bit of a skeptic on the aviation one, on Next Gen, which our sister committee, the Commerce Committee, were very thrilled about, and we provided some kind of changes on the reauthorization for aviation this was in 2012. And you know what? Look at what happened. Next Gen largely worked. The traffic in airports became much more manageable, flights much more on time, much more handling of capacity of travel. Certainly that mattered. And you start off with that on infrastructure. There may be disagreements about the scope of infrastructure. Democrats may take as maybe a little wider view of it than Republicans, but there is a lot of commonality there. And it's jobs. There's definitely jobs connection to that, I think, intuitively and through the data. And that's helpful. And so I think infrastructure is a place where they can go. I mean, you already have, like I say, the footprint of the key authorizing committee acting in the Congress early, I guess it was in the summer of the first session. So you have that already. You have John Barrasso as chairman, and he is a conservative, but he is very much pro-authorization. You have Peter DeFazio as chairman from my home state of Oregon, as chairman over there in the House, and he has spent a lot of time on this. So I think, look, after the election, to me, that's a profitable place for members on both sides to go. And we have mechanisms. We have the trust funds are in the Internal Revenue Code, taxes are in the Internal Revenue Code. So it's always one of these things where the tax writers and the authorizing committees kind of collaborate on the policy. So I think it's a natural place, no matter what the election outcome is.
Yeah, and Kara, just to throw in, obviously it's really important to Chairman Neal. It's been important to Secretary Mnuchin as well. The House, as Mark discussed, the FASIA, they passed a $1.5 trillion bill, comprehensive infrastructure bill. I do think the table's set. I think it would be a missed opportunity if they didn't do it, because interest rates are low and infrastructure, I think people realize our crumbling infrastructure is something that actually does need to be upgraded in a whole bunch of areas. From the tax standpoint, it's not necessarily a tax driven bill. Obviously, more of it's going to be on the spending side than on the tax side, but there are features that are tax provisions, like the bond provisions and the financing provisions, and then maybe potentially some of the revenue offsets as well, if they decide that they're going to do revenue offsets. So I do think it's an area that certainly there's common ground. And if you're looking for a way to get to 60, along with COVID relief, it's certainly a way to marry the two and try and get that across the finish line, because there's enough common ground there to do it. And certainly, just to harken back, there was significant infrastructure, albeit not on the scale we're talking about here, done as part of the Recovery Act, which was obviously done early on to stimulate the economy. So I'd harken back to that a little bit as well.
So if I can, we would be remiss if we didn't at least address some of the TCJA. And so Mark, I'll start with you. If we end up having President Trump reelected, what's the future of the TCJA under President Trump? And then if we have a President Biden, sort of the same question for you, John.
So I'll start with Trump. To me, it seems like President Trump has kind of three themes, right? One theme is to continue the path on TCJA, so clearly dealing with the sunset of the individual provisions. The other thing is you get some mixed signals from the administration on this. For instance, the White House, I think, is bullish on dealing with the delta that we talked about earlier between current law and current policy. But the Treasury Department is also mindful of some of the deficit impact that we talked about on that. So they'll have to work that out. But that's shown in the budgets that they put forward. So I think a continuation there. I do think to make law, they're going to have to find a way to meet and address the priorities that House Democrats have put forward. As John said, they weren't in the room on the discussion. They weren't part of it. It was a partisan process. So I think a Democratic position, as I see it, is, well, wait a minute, we're not going to just address some of these design issues from the perspective of the product as is. We want a broader playing field. We want to look at more on the earned income credit. We want to look at more on the refundable child credit. We want to look at some other features of the legislation, more on the individual side. And then we want to revisit on the business provisions and on the offset side. There's over $1 trillion in business offsets in TCJA. And the corporate rate is sitting there. My sense is the administration and if Senate Republicans are in the majority, or if it's a regular order process, will resist significantly ramping up the rate or features of the offsets. But part of this is when you want to legislate, you have to consider what the other side needs and what they want. And so I could see the president kind of laying out, his agenda based on TCJA, fixing some of these issues, perhaps dealing with the sunset. And then he has other new starts that kind of like some similar in intent to the former vice president in terms of incentives for onshoring and other policy initiatives. And then the one thing that I do think the president, at least in the last few weeks, has created some controversy among Republicans is the idea of, in effect, dealing with a payroll tax cut without a bigger picture of what the future of Social Security, the linkage between the payroll tax and the benefits are. That ran into some opposition among both Democrats and Republicans. So I don't know whether he, comes back to that. You can get to the same result through the income tax system. Ironically, you could probably help a lot of the same group of taxpayers with changes to the earned income credit. You could probably reward people more for work at some of the pressure points inside the structure of the ITC. So, again, it goes back to real discussions. If he's reelected, again, likely to have a Democratic House, probably more likely if he's reelected to have a Republican Senate, but probably a very narrow majority Republican Senate. And it may be a Democratic Senate. You just don't know. So to make law, they're going to have a bigger discussion.
Or you want me to answer that from a Democratic perspective?
I would, if you would like to venture an answer.
Okay, well, obviously, I've discussed that they're likely to revisit some of the Tax Cuts and Jobs Act. That will depend, as Mark just alluded to, the makeup of the Senate. If the Senate flips, but there are very narrow margins, that's going to make it more difficult to revisit some of those issues. But the issues that they would focus on, I think, as a first order would be the individual rate cuts. I think they may want to revisit the SALT deduction issue, which they could marry with the rate increase from a distributional standpoint. And then the corporate rate decrease in TCJA. They may want to increase that. As you know, he said he's going to take it up to 28%. Depending on who you talk to, there's a lot of feeling that it will only go up to as high as 25%, because when you add the state tax rate to it, you start getting out of balance if you go higher than 25% with the OECD. But their view is that 25% was the number that the Republicans originally were focused on prior to TCJA on a deficit neutral basis with Dave Camp's bill. And so that may be an appropriate place to land as well. As far as individuals, just to make it clear, I think the Vice President Biden has said that he would limit the increases to only people making over $400,000. I know there's been some confusion because of some of the campaign, but he's been pretty clear on that. And then lastly, I guess estate and gift, from an estate and gift standpoint, I think that he would look at that because he's going to be looking at income inequality. And that's certainly a response that he can offer that's relatively straightforward, that it responds to some of the progressive concern over wealth taxes and some of the other things that were on the table during the campaign. So I think estate and gift is probably the easiest way for him to address that. I don't think they'll ultimately go back to the levels that he's talking about. One story real quickly, the House last year was considering a pay for the CTC and the EITC, and they were considering rolling back the sunset of the estate and gift proposals from 2025 to 2023. Seemed like a pretty straightforward offset. And yet they couldn't get it through their caucus because of the people who were frontliners were concerned about it. So I think that's an issue. You know, we think estate and gift tax is easy for Democratic members, but it's not that easy. And tax increases, you know, tax increases are much harder than tax decreases. So I hearken back to the 1.5% that Mark, I'm sorry, the 1.5 trillion that Mark had to spend on tax reform. And even that was difficult. So trying to raise money on people generally is much more difficult.
Without a doubt. Well, I think we could probably keep going for a lot longer, but our hour is up. So I want to thank you both so much for sharing your time and your insights. And I look forward to the next webinar.
Thanks very
so
much.
Have a great day.
Thanks, Gary.
Thank you.
Bye-bye.
Bye.